welcome and red rose greetings to you all who are now in front of myself. And before launching my presentation, I would like to pronounce myself at first. And here I am Mohammad Mohabbat Hussain, lecturer, Department of Accounting, Government Hussain Said College, Magura. Today I am going to take a session on accounting, and today's topic is accounting cycle. Let's go to the slide very quickly, and I would like to introduce with this particular topic very clearly. What are we seeing? Merry-go-round. Merry-go-round. That means a cycle, and it's a name in Bangla Nagardola. That means it is a merry-go-round. So it is a cycle and it has two wheels. It is also a cycle or a wheel. If we add with it accounts, then what is the result? The result will be a accounting cycle. That means it will be treated as accounting cycle. Similarly, at the end of session, the learners will understand very clearly about accounting cycle, steps of accounting cycle. They can explain the various steps of accounting cycle, and they will identify the suitable books for recording the respective transactions. And last one, they will realize what accounts will be go on years after year. In what way the accounts will go on years after year. Now it is time to understand the definition of accounting cycle. Accounting cycle is a process of a complete sequence of accounting procedure in appropriate order during each accounting period. Accounting process is a combination of a series of activities that begins when a transaction takes place and ends with its inclusion in the financial statement at the end of the accounting period. That means accounting cycle is a process of a complete sequence of accounting procedure in appropriate order during each accounting period. So, accounting cycles step. The step of accounting cycle, first one, identify the transaction, and number two, analyzing the transaction, and number three, journalizing, number four, post to the ledger, and number five, preparing a trial balance, number six, adjusting entries, number seven, preparing a worksheet, though it is not a compulsory. Number 8, financial statements. Number 9, closing entries. Number 10, post-ledger trial balance. So, for better understanding, again I would like to repeat: to identify the transactions, analyzing the transactions, journalizing, posted to the ledger, preparing a trial balance, adjusting entries, preparing a worksheet, financial statements, closing entries, and post-ledger trial balance. So, in any way, we may explain it in 11 steps. And first one, similarly, identification of the transactions, journalizing, posting to the ledger, preparing up a trial balance, adjusting entry, adjusted trial balance, preparing of financial statements, closing entries, and post-closing trial balance, and extra one reversing entry. So, in this way, now it is time to explain the accounting cycle's steps. Steps of accounting cycle. You are watching a market. Here the bargaining issue is strongly visible. So, and another way, for purchasing goods or services or selling goods and services, the financial interaction with currency is strongly required. So it is time to understand for these two interaction identification of transactions. That means when this interaction will appear in front of you, then you have to identify the transactions. It is also a scenario of transaction, and it is also a counting process. That means it is also a transaction. Now, this is defined as analyzing the transaction. Okay. Even after that, in analyzing the transactions, we have two sides. Number one, debit and credit. According to the nature of the accounts, say assets accounts, nominal accounts, and personal accounts. In modern way, we may say assets accounts, liabilities accounts, revenue accounts, owner's equity, and personal accounts. So these interactions, when will appear in front of you, you have to segregate by preparing the debit and credit. That means you have to analyze the debit and credit for all transactions. And even after that, the the journal will come up to you. That means by segregating debit and credit, we have to record in the books of journal. So now, in journal entries, that means journalizing is the name as a primary books of accounts. That means journal is the primary book of accounts. And first to the ledger, that means ledger is known as the final books of account in the language of accounting. And preparing a trial balance, it is not mandatory. It is just a working activities. That means it is known as, in the language of accounting, a book of workings. Accounts book of workings. That means it is a helping activities. Okay. Number 6, adjusting entries. And number 7, preparing a worksheet. A worksheet is a columnar sheet or computer spreadsheet, one which accountant from an adjusted trial balance. Adjustment will be highlighted. Even after that, they will make adjusted trial balance, and from adjusted trial balance, we have to prepare income statements and balance sheet. By preparing income statements, we will understand how much amount of loss or profit raised at the end of the session. And by preparing the balance sheet, we will understand the full focus of assets, liabilities, and owner's equity of the organization. That means balance sheet is the full picture of an organization for financial position. Similarly, number 8, financial statements, and number 9, closing entries. By closing entries, we have to finish the respective income and expenses items, that means the nominal accounts. And number 10, post ledger trial balance. So again, to identify the transactions, analyzing the transactions, journalizing, posted to the ledger, preparing a trial balance, adjusting entries, worksheet, financial statements, closing entries, and post ledger trial balance. These are the steps of accounting cycle, and 1 will be adjusted with 2, and 2 is required for 3, and 3 is required to number 4, and trial balance will help to make 6, 7, 8, 9, and 10. That means number 5 is a paper of workings, is a account of workings, and number 5 will help to prepare adjusting entries, and from here we may prepare worksheet. From worksheet we may get financial statement, and it helps to adjust the closing entries, and after making the closing entries, from here we may set the post ledger trial balance. So in this way, 10 and 1 is very important. That means number 10, post ledger trial balance, will go to number 1 again, and this circle will be continuing according to the nature of the inputted items of transaction. Dear learners, this is accounting cycle. So again, to identify the transactions, analyzing the transactions, journalizing, posted to the ledger, preparing a trial balance, adjusting entries, worksheet, financial statements, closing entries, and post ledger trial balance. It is a sequence. It is a sequence. You have to maintain this sequence while recording the transaction. While recording the transactions, you have to maintain this sequence. So it is time to check the respective question which are usually come to your exam. So in practical solution, the question is, how many steps included in accounting cycle? 10. That means the answer is 10. Identification of the transactions, analyzing the transactions, journalizing, posted to the ledger, preparing a trial balance, adjusting entries, worksheet, preparing a financial statements, closing entries, post ledger trial balance. Number 2, in what way you will justify whether the transaction has been recorded in the books of account or not? By real, by trial balance. By trial balance, you can justify the accuracy of the recorded transactions. Okay. Number 3, the question number 3. For knowing the actual condition, actual position of an organization, what's entry are usually given? What's entry you have to give? Adjusting entries. The answer is adjusting entries. By giving the adjusting entries, you may set the full picture, full figure of an organization's financial position. Okay. Now number 4. Why the financial statement is prepared? For what purpose the financial statement is prepared? And what is that? It is a worksheet. By preparing worksheet, we may get the easy process for preparing the consequent next items. That means financial statements, and by financial statements we may understand profit and loss position of the company and the balance sheet of the company. Another question, number 4. by which accounts we may get the profit and loss, assets, liabilities, and owner's equity. Answer is that by making or by preparing financial statements. Question number 5. By what account we may record it? Income and expenses account as a closed account. That means by what accounts we may close the nominal accounts. Nominal means income and expenses accounts. Okay, by closing entries. By closing entries. Very important question. Number 6. By what account assets, liabilities, and owner's equity are adjusted? That means started. Here by opening entries and post-closure trial balance. Number 7. What is the task of accounting cycle? Accounting cycle make a bridge between before and after sequence of items of accounting cycle's step. That means it works as a bridge of each account, respective each accounts of accounting. So it is high time for us to evaluate the respective points that we have already learned from the respective points. Number 1, how many items of accounts are included here? Number 2, what are the first steps of accounting cycle? What is the last items of accounting cycle? Now tell us or define the accounting cycle. Which account is called the final books of account, and which one is the books of workings? So we have to finish here, and thank you all for staying with me, and